Hello guys, welcome back to Aka Forest. So in this episode I'm going to teach you guys, I'm going to show you guys how to take a continuation entries. And one thing that you must know is that before you take a continuation entry, first you must establish your directional bias first, because if you don't know your directional bias, you can't take a continuation entry. No. So this is Kiwi card pair, and I'm going to break this pair down. We are going to establish our directional bias, and when our directional bias is established, then we will move to the lower time frame to take a continuation entry in line with the already established bias. So this is the weekly time frame that you can see price came to a support level. There's not just a normal support level. There is actually a high quality support level, because we could see that price rejected from this zone multiple times, 1 2 3 4 5 several times. When price came to the level again, we were expecting reaction from this level. And now in the weekly time, what you can see is that there was a gap up when this bearish engulfing candle opened. The next candle gapped up before it opened. So let's move to a daily time frame. In the daily time frame, what we are seeing is that we could see all red candles, and then when price came here, it gapped up, and then it printed this green candle with long wick stick, rejecting the support, showing that sellers are losing momentum and then buyers are stepping into the market. That also gave us a bullish bias unconfirmed, because all that we are seeing over here is a momentum loss through candle color change, which shows that sellers could not push through the support level. There was a gap up, which also shows overbought situations, and there was also a long wick candle rejecting the supports. All these are telling us that sellers are actually closing their short positions and opening a new long position at this level. So let's move to our 4-hour time frame. So now we have weekly bullish sentiment in our mind, because price came to a weekly support level that has rejected several times. So we are expecting price to reject this level again. And when price came to the level in the daily time frame, we could see all red candle, and then boom, there was a gap up, which shows overbought situation, candle color change, which showed momentum loss, and then a long way candle rejecting the support, which also showing a momentum loss and also giving us a bullish bias unconfirmed. So when we move to the 4-hour time frame, what we can see over here is we can see a falling wedge. A falling wedge. Now, what do we see next? Price broke above the wedge, and now this confirm the weekly support level. That's a weekly multiple rejection of that support level. Daily candle color change, long wick candle, and the gap up, which also was giving us a bullish sentiment unconfirmed. And when we drop to the 4-hour time frame, that is where all 3 time frames now confirmed, and then the breakout also confirmed that now we have a bullish bias. So having established this bias, you can take a swing entry over here. I've actually done a video on this setup before, but this time around I'm going to do a swing trading. I'm not going to enter a swing trade. I'm just going to show you guys how to do, or how to take a continuation trade. So you can take your swing trade after the breakout, but there can also be a false breakout, and then you will lose the trade. So in order to prevent that, that is why one of the most secure way to avoid false breakout is continuation trade. So now that we have established our directional bias as bullish, we are going to go to the lower time frame to look for a continuation trade in this leg. because we have established our directional bias as bullish, and we want to trade with the directional bias, that's the bullish sentiment that we have established. So we are going to look inside this leg in the lower time frame for a continuation trade, and that also gives us a more secure entry. So let's move to the 1 hour time frame. In the 1 hour time frame, we are still within the leg. So now let me delete it. So in the 1 hour time frame, what do you see? If you know chart pattern very well, this is what I see. I see rising wedge, and then the market broke the rising wedge pattern. You take your entry here, you put your stop loss here, and then you target 1 to 2, or you can put your TP at the next resistance level. So you see, simple stuff. And we smash PT over here. There was another continuation trade also through a pullback to the support level. So price broke this resistance level and it pulled back. So there was also another continuation trade over here that you can trade in the bullish directional bias that we have established through the top-down analysis. So guys, this is how we take, or this is how we take, yes, continuation trade. First, you must always make sure that before you take a continuation trade in a lower time frame, your directional bias must be established. It's very important. I hope this video has helped you to broaden your understanding when it comes to price action. I'll see you in the next video. Take care.